Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partner broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys. Good morning. Welcome back to another live stream. Hope you're doing well. Depending on where you are in the world, could be morning, good evening, good afternoon, good day, good night, wherever you are in the world. Thanks for being here. As we jump into another week in the markets, talking about what is to come, talking about setups, ideas, things that I'm looking out for. We're going to go ahead and get right into it. As we get started, if you guys could do me a big favor and hit the thumbs up button on the stream, subscribe if you're new, all that good stuff. Let's get into it. Stocks are lower here a little bit this morning, down 0.18 for SPX. NAS is down 0.31. You got the Dow Jones down just a tiny bit. Get the Russell about flat here on the day. And I am actually watching the Russell for some possible entries on the long side. The dollar index seems to be holding up just fine, despite Friday's bit of a sell-off on Friday for the dollar index. A little bit of a bounce coming in here this morning. We'll come back to the dollar and look at all of these things in more detail in just a moment. The Nikkei down 0.25%. VIX up 5%. So a bit of volatility coming into the picture here this morning. Chinese stocks down 1% here today, giving back some of those big gains that we saw on Friday. Gold is up 0.5%. And I mean, look at that chart right there. That is a beautiful chart right there. Dare I say that it was a lot of perfect candles here.
Perfect candle.
I mean, look at that move on gold. That is a beautiful move. If you are a bull right now, then congratulations. That is the kind of move that is a game changer. You're talking about just this last swing here, about 5% gain further in the price of gold. That's huge. Gold does not want to quit this year. It is absolutely gold's year. Gold is winning the Super Bowl this year, that's for sure. Or the World Cup, whichever you'd like to think of. Gold is winning it, whatever it is. Gold's been absolutely killing it. Massive, massive upside. Good morning to everybody, by the way, in the chat. Seeing some people saying hello. Hey, James, what's up, man? Good to see everybody. Yeah, so when you see gold up like this, I'll tell you what. There's this tendency for a lot of people to say gold is just going to have this big old correction. But I want to take you guys as a quick reminder to the monthly chart. Yes, the 12-month chart. This is every candle is a full... I'm sorry, I want the 12-month chart. The 12-month chart. I want to show you something. This is the price of gold, right? Do you see how many years in a row gold can go up? Before you shout, oh, gold is overbought, before you say it's got to come back down into correction territory, do you want to play that game? Do you want to play roulette here? Inverse roulette, where 5 out of the 6 chambers shoot you. That's trying to play gold to the short side, in my personal opinion. Does this look overbought in the short term? Sure, but let me show you something right here. Let me show you. Do you think this looks overbought? That looks pretty overbought, right? What happened in the next candle? Wait, hold on. Let me go. How do I just jump a full bar? Am I missing something? Anyways, you guys get my point. Look, this is 2010. 2010, the market ripped higher for gold. It was a massive up year for gold, up about, lo and behold, 30%. About how much we're up this year. But then look, if you're somebody who's saying bearish right now on gold, it's got to come down. Look what happened. We said this is 2010. Look at 2011. Look at 2012. The gold market from those what seemed so overbought went up another 35% before topping out for a few years. My point with showing you this is that when you look at gold's price right now and you say to yourself, this is overbought. I'm going to get in front of this and I'm going to go short and it's going to tumble back down to earth. The problem with saying that when something is in a bull run is that you are most likely wrong. You are most likely wrong about that. Because when bull markets happen, it's so difficult to call the top. We could do more examples, by the way. That's just one example, but go back in time and look at this. If you had called this overbought, gold up 137%. What year was that, by the way? 1980? Holy junk. Look at that. So 1980 up 130%. If you had called that overbought, look what happened next year. It went up another 64 freaking percent. This is gold, guys. A boring metal that billionaires stock away. Gold goes up over time. Now, that does not mean you chase this thing. That does not mean that you just say, oh, okay, so I'm just going to go all in and I'm going to certainly make money. No. You still wait for pullbacks. You still wait for opportunities to get better pricing. But understand that trying to say gold has to come down right now is a fool's game. If you have a fundamental reason and something changes, you know what happened in 2013, 2014, 2015? The economy kind of rebounded a little bit from all the 2008 stuff. Look at 2008, gold market went flying high because the world fell apart and people were terrified, right? Right now, what's happening? Well, people are pretty scared about what's going to happen with the election. They're scared about the Middle East, Russia, China. These things have people on edge. And so gold is going up again. Not only that, the Fed is printing money like a monster. Well, they have been, especially in the last few years with like 2021 and all that stuff. There was a lot of money printing that came into the system, which should make prices go up on gold. Gold should be higher than this, in my opinion. It should keep going. 2,700, in my opinion, you'll look back on that in the long term and say that was cheap. That's my opinion, and I could be dead wrong. In 5 years, gold could be down to 445 an ounce, and you can send me this video and say, you're an idiot. And I'll say, yep. But most likely, I'm right about that. Most likely, you'll look back at the price of gold at 27.45 and say, oh, that's a good price. Type yes in the chat if you agree. Type no if you disagree with me. Now, granted, we could have this period, in which case that was a pretty nasty drawdown for gold. If you were the unfortunate person who bought the top, you saw a 45% pullback on your money. I'll tell you this. In my lifetime, gold has had a couple big dips. I was born in 1996, and I should have been trading gold at that time because I could have bought gold at really low prices and made a bunch of money. But stupid me, I was playing with trucks and tractors in the sandbox at that time and was doing the wrong things. I was playing with sand when I could have been playing with gold, right? 96, baby. Yes, Laura, 96. Not a bad year. They did the Olympics in Atlanta that year. I remember I competed in them. I was 0 years old. 0 years old. That's when I won my first gold medal. Anyways, jokes aside, the point is that I'm trying to get at, when you look at gold, when you look at silver, when you look at the S&P, and you think to yourself, this thing is overbought, just be careful that you're not making the same old mistake that people have made for generations of thinking assets should be overpriced. They can go up for a very long time. A very long time. So, Laura says, I'm 89. Nice. What year are you guys? What year are you guys? You can share if you'd like to. You don't have to. What year were you born? I'm just curious. Any 90s babies? I'm not really a 90s baby. I feel like a 90s kid, you had to have been like born like late 80s, early 90s to experience them at all. 88, 39. Phase is here from 1939, guys. My man was serving in World War II. 92. Okay, lots of 95s, 90s, 87s. Okay, you guys are similar age to me. Anyways, let's take a look at some stuff. NASDAQ, S&P, correcting a little bit here. So my point is when we come back to gold here, and we say, look, gold goes up over time. It doesn't mean you chase it, but it also means that you don't view this thing. You have to be careful calling something like this overbought, right? Because if it pulls back, it could become way more overbought. And I like that setup. I mean, I'm not personally looking to go long gold at this time, simply because I don't see the right factors that are making it pop up in the Edge Finder. This is my current watch list. I'm looking for possible shorts on the euro, longs on Bitcoin, NASDAQ, S&P, Dow Jones, Russell, all the US indices, and Bitcoin. I'm mostly watching. I'd like to look at the euro just to see if I can get that sell set up anytime soon. This thing has been leaving me in the dust and really painful. I really was looking for that euro short. You can actually see my setup was right here. At the time, I was looking for a pop back up into this resistance level or the 38.2% retracement for a possible sell setup. And now the move has really gone off without me. So I'm looking for a correction if we get one. I'm not saying I think we will, because I'm not going to go long the euro. But if you do get a pullback on the euro, I'm looking for possible continuations to the downside. I think that the US economy is, some of the readings that we're getting are very upbeat right now and look really strong. By the way, guys, if you want access to the Edge Finder for 30-day trial, if that is something you're interested in, you can get 30 days access to the tool by applying for it. We'll drop the link here in the chat if that is something that you're interested in. It is the primary tool that I use to find the trades that I take. No question. I mean, I got asked this morning. Let me show you guys. I got asked a question this morning. This is legitimately my answer. Somebody said in our group, they said, what's on your watch list this week? And legitimately, my watch list is generated for me every single day within the Edge Finder. The top setups, whatever's on the Edge Finder, always. That is always the answer to what am I looking to trade this week. So I'm watching what is on the top setups page, which again, we've got S&P top setup here, very bullish top setup for S&P. So if I'm looking at the S&P 500, where am I looking for an entry on this one? I'm looking for a pullback, as I have been for since 1996 when I was born. Been looking for a pullback, and 38.2% retracement probably is the only thing that makes sense to me right now. There's a lot of stuff, guys, that is running away from me. Now, I do have some positions on the indices, so I don't mind that they are running away from me on this one. I'm more annoyed with like euro because I wanted to get a short on that. But with the S&P 500, with the Dow Jones, just waiting to see if I can get a pullback on this. If I can get a corrective move on these things, I will probably take some more long positions, meaning I'll probably add to what I already have. I have a bunch of trades currently open. So I am long. Oh, also the Russell was on the watch list. So let's pull up the Russell. This is a new contender here. Let's pull up the Russell 2000 index for just a second here. I'm looking for a pullback for this one into this area. And this is probably, of all of the things that I could be actually taking trades on soon, the Russell's probably it. Which, by the way, if you guys are looking for a brokerage, if you're outside of the US, we're going to drop the link to Vantage Markets here in the chat really quick. If you could do that for us, Chandler or James, that'd be awesome. Vantage actually allows you to trade the Russell. I've had some people who have been asking about this. For US traders, of course, you can trade it on the futures market. You can trade it on what I do, which is like my brokerage, stock brokerage. But if you're somebody outside of the US, you can actually trade the US 2000 on Vantage, which is the Russell. So if you're interested in trading the Russell, which is something, like I said, that I trade personally quite a bit, they also offer a deposit bonus, and we're doing a huge plug for Vantage right now. I didn't really intend for that to happen, but low key, their deposit bonus is really generous, and you can trade like everything under the sun in one brokerage. You can trade even stock CFDs. You can trade some ETFs in there. Like you can trade a bit of everything with Vantage. So check them out if you have not already. The link is in the chat. I highly recommend you take advantage of their deposit bonus they've got going on right now if you are looking for a new brokerage. Okay, so anyways, NASDAQ's recouping some gains. So I mentioned I don't mind if the indices just keep ripping, because one of my biggest positions right now is just long semiconductors, the ETF SMH. I discussed this on my Sunday video yesterday. I am long semiconductors. I think that they have actually, they have, not a question, they've lagged the market here recently. Semiconductors are still well off their highs. Meanwhile, the S&P 500 is well above its highs. I think that semiconductors, NVIDIA's, Qualcomm's, AMD's, Micron's, companies of that nature have some of the best earnings potential gains in the market at this time. There are many, many huge companies that have huge cash flows, investing a lot of money into buying chips from NVIDIA, like the Blackwell chips that they're working on, and all this, super powerful computer chip stuff that's getting built has a huge demand globally. The other thing we saw recently is for the semiconductor nerds out there like myself, Taiwan Semiconductor smashed their earnings. This is a ginormous manufacturing company for semiconductors, and that's a very positive sign. Now, there's been some negative stuff. ASML, this is one that really sank hard. Let's see how that one's doing today. I know Frank actually has a position on this one. Frank sold a put credit spread. No, wait, what did he do? Yeah, he sold put credit spreads. I believe that's right. Which basically says as long as price doesn't go below this low, if it can go anywhere here by expiration, he makes money. If it bounces, he makes just as much money. So Frank's got that position on. I think semis have the potential to continue to run. I also think that Bitcoin is one that I want to get a new position on. So I have currently, let me show you this. I have a position on BITO. So let's take a look at this. Positions, BITO is a Bitcoin ETF. I sold puts on. So I sold the puts for 66 cents. Now, if you're selling puts or shorting puts, you want the value to go down. They're currently trading at just 4 cents. So this position is up about 94% of the max premium, floating around $620 in gains, with an expiration date coming up very soon. Now, I know not everybody in the audience trades options, but essentially, without getting into the options technicalities, I have a bullish position on Bitcoin, but I am looking to add another one. If I can get a pullback here on Bitcoin, I will definitely be looking at this 38.2% for a possible entry on the long side. And I think on this case, I'm not going to sell puts. I think I'm going to actually just take a momentum trade, meaning I have two strategies. I have a strategy that prioritizes sort of momentum, and then sort of a strategy that prioritizes mean reversion using options. And again, without getting into the technicalities, mean reversion is basically when something seems too stretched, you look to reverse the trend, and momentum is when something is trending well, you look to join the trend creatively. I have two different strategies that I primarily use within my trading. So I'm looking for a pullback on Bitcoin. I'm looking for a pullback on the Russell. Those are two pending setups for me in this week's trading. Russell's looking pretty interesting. I can actually zoom in here, maybe look at this on the 4-hour chart. Yeah, this looks so good. This looks like an entry for me. And again, remember, you can trade this directly on Vantage Markets. We dropped a link earlier, but maybe we can drop it one more time. They do allow non-US traders to trade the Russell through a CFD US 2000. If you are already on Vantage, just look up US 2000, find that within your MT4 or your trading view, and you can trade it if that's something that you're interested in. Anyways, if I take those trades, I'll share them in Discord. If you are interested in joining the Discord, we'll also drop the application link. We have a free Discord, and a paid Discord. If you'd like to join the free one, you can apply for it using the link being dropped in the chat. You guys are saying the screen is lagging. Let me share my screen again. Hold on. Let me know if this makes it any better. Hold on. There we go. Share. Okay. Tell me if that's any better, guys. I hope that is. Sometimes the streaming software that we use has some bugs in it. It's a little glitchy at times. So let's see. When we're talking about the Russell, when we're talking about the indices in general, why the Russell? Why would I trade the Russell at all? Well, part of the reason for the Russell is it's the small cap index. So it's smaller companies within the United States, which do well when conditions are very favorable to businesses. And I think that we're sort of entering into that soft landing idea, which is basically the Fed is looking to cut rates. And at the same time, the economy is holding up pretty well. The Russell's down 0.5%, let's call it. If we get a move down to this 38.2% retracement, I'm probably going to add some to my positioning. Also, let me know, guys, if the screen looks better now. Hopefully it does. But indices kind of just moving around here at the time. Gold. So I know a lot of people are probably wondering, what's the setup on gold? Where's the trade? And the answer is, frustratingly, there is nothing here, right? There's absolutely nothing to do here. If you are in this gold trade, then congratulations. The rest of us are jealous of you. If you're long right now and this thing is just trending in your favor and you're trailing stops, then congratulations, you are awesome. If you are not, like myself and probably most of us, not in this move, do you start selling it? No. The only thing, you do what you want. I'm going to tell you what I'm going to do, which is always on these streams, my opinion, not financial advice. And I've been dead wrong in front of everyone many times. So you probably not trust anything I say. So gold at 2740, is this a sell? Well, why would it be a sell? You have to ask yourself, why are you saying is it because you're not in this move and you want it to go back down? Is that why you want to sell? Because that's not a good reason to sell. A good reason to sell something would be because you think it has the potential to start trending continuously lower, right? If you really think something is a sell, then you think fundamentally it's going to continue to trend very long term in the direction that you're looking at. So when I look at gold, the trend is up, right? The trend is strongly up. Until that changes, until you see something like this, where we come down to support and buyers try and take it out and it doesn't work, and then buyers try again and it doesn't work, and sellers are rallying at resistance points, that's when the trend has truly flipped. But we're not seeing that at all, right? Look at this. Sellers were able to take out this level of support. But then when it came back up to this area, which was an area I was looking at possible sells, they did not hold it whatsoever. We actually started breaking out, and then we broke through this key level of resistance. Those are the exact sort of bullish price action things that buyers want to see. So at this point, I think if you do get pullbacks, this trend to the upside is innocent until proven guilty. What I mean by that is that we can't assume that this big move up is going to just precede a ginormous crash. We can't assume that, because if we had assumed that, then we've lost all our money this year. If you this year have said, oh, big move up, it's got to come down. Look at how silly of a trading strategy that is this year. If you said, oh, it's gone up a lot, it needs to come down. Oh, it's gone up a lot, it needs to come down. You are a broken record this year. Maybe you had a couple wins in there, but if you sold all these different times that I'm showing you, pretty much all year, you've been getting smacked pretty hard, right? This has been a really tough year to try and fight the trend. Look how many times we just illustrated, and how many times did sellers really get a good sell-off? Very few, right? Here's another way of mapping this out. The bulls all through this period just won, right? Sellers won for a little bit here. Sellers won for a little bit here. Sellers won for little, sellers won for little, sellers won for just a tiny bit. But then let's go back to the bulls. Bulls won here, bulls won here. This is 101 why fighting the trend is a very hard strategy. Look at how much upside there was, how many times the bulls just won out and made money, and how few times the sellers made anything. And that's assuming you got out at the perfect low as a seller, right? The trend to the upside is not something I want to fight. Anyways, guys, we are going to take a quick break here, thank our sponsors, and then Mr. Ivan FX is coming on the show here to talk a little markets. Before we jump into that, let me just remind you guys, if you'd like to get access to the Edge Finder, we do offer a 30-day trial. If that is something that you're interested in applying for, we'll drop the link here in the chat right now as we speak. And if you're watching this at a later time, you can also find it in the description down below of this live stream. So make sure to apply for an Edge Finder copy if you'd like to try it for 30 days. It is a tool that our software team here at A1 Trading has been working on for the last 2.5 years now. We've brought it to market early 2022. So yeah, I guess so. Anyways, guys, taking a quick break, and then we'll be right back with Mr. Ivan FX. Stay tuned. You know, this Edge Finder thing is pretty cool. I can trade it all sorts of different ways, and for me, I like using fundamental analysis and macroeconomic data to try and make better decisions. What do you like to use it for?
I'm more of a proponent for the COT data or the business forecast tool.
Did your tooth just fall out?
It was my baby tooth. It'll come back. Hey, at least I don't burst into flames when I step out into the sun.
Trading without the Edge Finder can be scary. The Edge Finder keeps you up to date with all the most important market-moving information. Check out the latest COT data, retail sentiment, fundamental data, and so much more. You can get the Edge Finder for yourself with the link down below, or click the link being dropped in the chat to speak now with one of our team monsters.
All right, and we're back, Ivan. Hey, what's going on, man? Good to see you. Happy Monday.
I'm just laughing off your little commercial there.
Well, we have to change it up. You know, we run the same sort of offers and things over time, and it's just like, you know, Red Bull's really good with their marketing. They got to change it up all the time. Coca-Cola's got to change it up. We've had a lot of fun doing the spooky season promos. We do it every year, so good to have you back on the show, Ivan. What's new with you? What are we watching?
I just want everyone to know, like, what is the market expecting for rate cuts expectation going forward.
Yeah. What's the latest?
I think that most surprisingly that Bank of Canada is most likely to do 50 base rate cut next meeting. I think that's 23rd or something. And then New Zealand also doing a double rate cut. Because everyone is rate cutting, but I think that's the more fun one, like a double one, more.
Yeah,
punch.
so you're seeing RBNZ, you're seeing Bank of Canada. Pretty much everybody's cutting rates. That dollar CAD, like you just mentioned, I was pulling that up a second ago. Dollar CAD is flying here, which makes sense with what you're saying. You know, remember, guys, that for currency newbies, when a central bank is cutting rates, it is generally more bearish for the currency. When a central bank is hiking rates, it is generally more bullish for a currency. So as you just mentioned, if they're talking about, you know, bigger, juicier rate cuts in Canada, 50 basis points, aka 0.5% interest rate cut, could certainly weaken the CAD and continue. And you can already see it kind of happening as we look at it. Is that one that you're looking to trade? Or so now that you have that data shared with us, Ivan, which ones do you then look to potentially trade? Do you trade in the direction of those expectations?
I have a problem. Because what's going to be strong when dollar's weak? Isn't that dollar? But I would a short dollar. So, you know, that doesn't make sense. So I've been trying to get into a bit of a more interesting, kind of kicking myself in the leg kind of trade. I tried to buy New Zealand CAD last week.
New Zealand
Uh,
CAD. Okay. And
yeah.
what's the thought process there?
Exactly. There is none. No, there is. So, in my opinion, CAD is going to get stronger in the end. New Zealand's going to get stronger in the end. It's just that when they cut or when they are pricing in cut, it's very weak. But then with lower interest rates, they will gain momentum because it will be a risk on situation. So, if you go back to like when the case is when everyone cuts at the same time and you go back to 2020 fall, dollar, like New Zealand, so dollar fell, everything else strengthened, but the world was crashing around us. So that's kind of where I am taking it from.
Yeah, fair enough. And what about the yen? You are the yen man after all. So
Yeah, I'm trying
yen
to
pairs?
distract you because it's in a range.
Yeah,
So I'm like, what am I gonna do?
that's so true. And that's one of the things too. Ivan, I've been talking about this with other people on the stream as well. Is like when you get a nice basket of things that you can trade, when one thing is doing nothing, you can just move on to other things.
Yeah. Now, as I really want this one to be aggressively higher, but when I see so mentally, this is kind of what happens without me telling you. But when I see that or that, like somewhere in that area, I'm like range, or we are pausing. And then I've been right since 10th of October, so for 11 days. I've been right about range. So I take a seat back. I don't want to trade a range. I hate ranges. I lose money in ranges. I will be a poor man in ranges. So I'll wait.
Yeah, that's very true. The ranges, especially if you are, for traditional trend followers like yourself and myself, usually that is where I lose most of my money too, is when things chop back and forth. They don't move, they don't follow through. Definitely a tougher environment to trade with the trend following strategy. So definitely agree wherever the trend is happening. My question, Ivan, too, you mentioned wanting to sell the dollar. What's your theory there? Why is dollar potential sell for you?
Do you have a different opinion, or are you just having fun now?
No, I actually am leaning more bullish. However, not at these levels. Like if I get a pullback in the dollar, I'm actually more bullish on it than not. Just simply U.S. data has come in so strong recently. But I'm curious what your thought is. Of course, you could be looking to sell, make money on the way down, and then maybe I look for longs here or here, and it doesn't matter if we agree or disagree. But I'm just curious what your thought process on dollar bearishness is.
If you can flip the screen, and 2.4 is the reason. Well, I can also go to PCE for that matter, or personal consumption expenditures, or PPI, and say, hey, look, but this is the piece of paper that I have been holding for so long, and say we have to wait for inflation to come down, then we will cut rates. But then I can change my view or my emphasis on what matters right now when the data doesn't align anymore. I still need to follow the data. So if I'm following the data, as we have had a little bit of a downtrend ever since June, we are supposed to be bearish on dollar. It's just, in my opinion, though, it's just, I don't know, pricing in for the election. I don't know. Something.
Yeah, the tricky part I have with the inflation stuff is, let me show my screen too. I think like dollar bearish against certain currencies, I can definitely see. My trickiness with like UK and Europe is that I don't know if you saw the UK's inflation. That's crazy. Europe, UK, 1.7%. So I do see, all central banks seem to be seeing a pretty good decline in inflation. But the pace for Europe and the UK still seems pretty solid compared to, well, even like dipping below their targets, right? 2% is the target. We're now seeing UK last week with CPI at 1.7%. Seems like they're going to want to cut rates pretty quick. So it's almost like for me with the dollar, I'm just more like maybe not like incredibly bullish on it per se, but more so just, well, they're seeing inflation come down, but not as fast or not as far as maybe the European counterparts. One way to also play this, Ivan, is if you're just kind of like generally thinking central banks are going to cut rates aggressively, gold is kind of the trade this year for that. You know, gold is like all the central banks cutting rates. Okay, gold's just going to fly.
Yeah. You're throwing me a curveball here. I agree. But I don't know. Well, maybe that little trade plan there might have, no, I didn't. Okay, actually I did. Like I don't seem to find entries on gold. Like it always spooks me out for whatever reason, left, right, or the center. So confidence is a
Gold
virtue.
is inherently it's tricky, right? And it like will move like this for months and months and months, and on the first pullback it just completely reverses. It's the trickiest. It's like riding a dragon almost. But I mean, when it comes to the dollar, I do, however, see the case for dollar needs to chill maybe at some point. You know, you've had this just complete uptrend. That being said, I personally can't see shorting it just yet. Maybe at 104, you could, if you have something that you like better, you know, perhaps the yen. I'm not sure. You know, if there's something that you prefer, maybe there's room to kind of sell that rally and look for kind of a corrective move. I just personally see, you know, pullbacks on the dollar still making sense until proven otherwise. But you know, maybe there's, I'm not actually sure what. Let's see, can we add like New Zealand, Japanese yen? Actually, let's take out that because that's ugly. New Zealand 2.2% inflation, dollar 2.4. What about Australia? Australia's giving me that's TRY. We don't want Turkey. Why is Turkey showing up when I do Australia? We got to fix that.
The bug.
There's a bug in the system here. Anyways, yeah, I mean, you can kind of see just the overall trend for inflation across all these different countries is still very intact. We're seeing some good progress there on the inflation stuff. The only thing I have for the pound, though, is like when pound goes down to 1.7, is that sort of like recessionary? Like, is the pound going to start just completely breaking lower and just continue lower? That's the question, because 1.7% inflation is almost like worrisome. You know what I mean?
Yeah. I just want to. There's a lot of things you're leaving hanging like threads here and there. So my brain is like overdue here. But okay, cool. One thing at a time. Kevin says dollar is quite bullish. I don't look at technicals when I look at market. I look at fundamentals. Fundamentals can be bullish or bearish, depend on the eyes. That's why I always say stick to how you see the world. Don't listen to me. Don't listen to Nick, because you both can be right at the same time. It's just how you interpret the data. Secondly, the GDP, the growth in the UK previously has been negative. So growth is not great. Inflation is not great. Can it be a recession? Yeah, because now, as far as I've been talking to my UK friends, is that they say that the energy cap has lifted, so that inflation might now come back from energy again, because you're allowed to now charge customers more for heating and gas. So yes, it's worrisome, it's low, but with higher inflation, higher energy prices and oil price, we might see this as a bottom in a way. But
yeah, that's a good point too. The whole, you know, when you talk about the UK too, it's different than in the US. Like the Russia-Ukraine situation hit them especially hard because of a lot of the, you know, energy supplies were coming from that area. So with the US, it wasn't directly as impactful, and that was why, you know, UK inflation skyrocketed up to like 10%. It's really plummeted off of a little bit of easement in that world. So we'll see how much of that is you know, inflation is lack of demand, or if it was simply just a improvement on the oil supply stuff. Speaking of oil's up 1.3% here, but still very much low here, which is helping the overall inflation story. It seems like, Ivan, we've got a pretty good picture here overall for markets going into, you know, the end of the year. Do you have any index positions? Are you trading any indices?
I knew that question came.
It will always show up. It's my favorite.
Yeah, no, no, not publicly. And the okay, I look stupid now. But why didn't I buy 6th of September? Why didn't you buy 4th of October? It's because at the time, so you can only take at the time. At the time, I felt the pullbacks hasn't been worth it. I want a 5% pullback.
Mm.
Will I get it tomorrow? Or I thought I would give. Actually, literally thought I would get that from 15th. But then I don't get it. Am I going to get that during the election night? That's scary. But yeah, I really want a deeper pullback, not a 58.67 price.
Yeah, no, I agree with that. And that's the thing. It's been very difficult this year. The indices in gold have been so up and away all year long. There's been very few pullbacks. That one that you mentioned, over here in September, you got a good pullback, but actually this one played me so bad. I was long over here. I actually got long at a great price over here, rode it all the way up, put my stop loss right here, got taken out, and I felt like a genius for about 3 days as the market continued to go lower. And I was looking for, maybe a retest of these lows again. And sure enough, it bottomed out, ripped higher, and I missed a huge chunk of that move. So that really stunk. But indices this year have just been tricky. The easiest thing this year has just been to not touch them. If you've just been long and holding on, obviously you've done really, really well. But there are times where that is not the case. If you had said that over here, I'm going to buy this right here, and you held it for years, you were in the red, and then you came back to break even. So just remember, for those listening, when you look at gold, when you look at indices and they're moving straight up all year long, just remember, times change. Things are not always that easy. The indices do not go up forever. They have big pullbacks. And I think, Ivan, I'll actually say that I think you're going to get rewarded waiting for that 5% drop, not rushing to it. Because again, look at what we saw back in, this is in an incredible year. So in an incredible year, we saw a 10% correction. That is going to happen even in incredible years in the stock market. You get 10% pullbacks because these things are very volatile. By the way, that's not even mentioning the NASDAQ. The NASDAQ, you got like an 18% pullback this year. So maybe not 17%, which is a huge, huge drop in a very bullish year. So, when it comes to the indices, patience is very, very key. It can be very easy to read the headlines and be like, stocks are going up, and they are, but they will have blips and moments of correction. And for patient buyers like yourself and myself, Ivan, we can be there waiting patiently for those opportunities. And for listeners, just don't be convinced that they never go down, because they do, and be patient for those opportunities. Don't rush in too early.
And I just want to say, just one more thing. If you go back in the elections, what happens is that I don't know where I have it from, because I just went back on S&P500 on 2020. The fall from mid-October to beginning of November was 8% or so. And if I'm going to buy there, or I'm presuming we are somewhere high, am I going to buy there? Yes, I might have an upside, but at least for 2020 it was. I might have an upside, but if I can get at least 5% pullback, if the move is 8, I'm in a much better position, because I know it should happen. And then if I kind of go away from that theory, then what am I been doing? So it's that kind of, I can't justify buying, because if I go broke because I'm buying higher highs all the time, I will never ever forgive myself for that. So
yeah,
I just have to follow what I do.
Patience is so difficult, but I've learned that over the years. I mean, you probably have as well. Patience is one of the most absolutely important things in trading. I know you hear it all the time. It's kind of cliche. Oh yeah, use patience. But I'm telling you, the difference between sometimes waiting for that dip rather than chasing it can make you substantially different in terms of your overall trading performance. If you were prudent about trimming your let's say that I've got an example here on the Russell. Let's just say that you were long the Russell over here, and
Mhm.
you've trailed your stops and you've stayed in this trade. You've now trailed your stops here, and you've done what you're supposed to do according to your strategy. I'm just sharing with you like what I would have done, shoulda, coulda, woulda if I was in this trade. Like if I was in this trade, like let's just say that this happens and I get stopped out, and
Mm.
oh, that stinks. The trade's over. But
Mm.
sometimes this is going to happen where, dang, I really just got played. But there will come a time where this happens. I take my stop, and then I'm very rewarded for my patience. And to Ivan's case, if you're not in the trade and you're waiting for a pullback, let's say that you wait for a proper pullback, you get your entry, and now you missed out on all that sell-off, all that losses, that people who were waiting or chasing experienced.
Mm.
You waited patiently and you finally got the right trade that you were supposed to take. It feels so good when you get rewarded for doing what you're supposed to do. Sometimes it's painful waiting, but that is it's important that you don't make that mistake, like Ivan is pointing out.
I always, if I buy, like if I break my rules, it's always going to be the peak. I always buy the peak. So it's painful to go through those emotions. I just don't want to go through those emotions again.
Yeah.
I just want to feel good about my trading, and if that means that I'm going to lose 5% or whatever move has been now, then so be it. Fine, I'll do it. But I think it's better to reward it than. I think it's better to reward yourself than to punish yourself.
Yeah, and if you miss out on a part of the rally, then you're not alone. That's everybody misses. There's moves that we all miss. Like I'm missing this move in gold right now, even though I've been bullish all year on gold. I wish I was in it, but I'm not. And I also would like to be in this Bitcoin move, but I'm waiting patiently. So there's active examples for both of us, Ivan. There's like these things where it's like we're waiting for the moves to come to us, and if we miss them, you miss them. But if you chase them, it's a painful lesson to learn. Chasing is a really ugly thing, because a lot of times what people will do is they'll be so convinced that it's gonna keep going. They'll leverage themselves heavily, and then when it drops, they just get wiped out because they couldn't wait for the proper pullback. So I'm looking at Bitcoin. I'm looking at some of the indices. The Russell is on my watch list just because we've been discussing it. Gold, I don't have any setups on. The Edge Finder doesn't have any current readings. It's just neutral currently. But this is also a really difficult move for those watching gold. This is a move that I think is predicated largely on geopolitics and the election. And that's a very difficult thing for me to place trades on. Granted, you're also seeing central banks around the world cutting interest rates, which is a very bullish thing for gold. But just kind of on the sidelines waiting for a proper signal and setup for me to actually take those trades. So, Ivan, what else? What else are you watching? Watch any other currency pairs?
The only time that chasing might be profitable is if you're chasing a girl.
Fair enough.
Am I watching something else now? As I really like, my real thoughts is I want to bullish New Zealand dollar US dollar. I think dollar whenever dollar goes bearish, New Zealand and and Australian is going to be the one that's going to benefit from it. So I'm just waiting for this one to rise and make a new higher high, and I haven't seen it. So is this the range for the election? I don't know. I don't think so. But so I'm just literally just waiting for a higher high here. And then I was watching right now. I might need to sell Euro New Zealand. Of those highs, but now I've been sitting here with you, so you took me away from that opportunity. But
sorry about that.
Yeah. So it's a central pivot. It's kind of bearish. It's on the New Zealand strength idea and the Euro weakness idea. A bit of seasonality also goes hand in hand. I see this as a lower high potentially, but as a form. So yeah, there I am.
Yeah, Euro New Zealand looks like it's a little slow here. Looks like it might continue to roll over. I agree. Should be interesting to see. I guess my odd thing that I'm watching is Bitcoin. I've been I've done some options plays on Bitcoin. Believe it or not, you can actually trade options on Bitcoin now. There's an ETF out there for those of you guys who are using stock brokerages or you trade options. BITO has been really a cool one to use for options. I've been able to, the premium that you can collect selling options on BITO is pretty incredible. Of course, there's lots of risk with anything, but you can definitely risk a lot by playing options. So be careful, of course, but that's been something I've been watching. Silver's been a crazy thing to watch. Silver is up so much this year. And on Friday was actually up 6%, partially due to the big bump in Chinese stocks that we've had recently. Silver has been doing quite well. Of course, the Chinese economy is manufacturing heavy. If they're coming back online, the consumption of raw materials, copper, silver, iron ore, oil, all those things could be bid up in price simply because of the demand for them. And then you've got yields. Yields are up here a little bit, probably contributing to the dollar strength here this morning. Of course, the 10-year yield has some pretty strong correlation to the dollar index. This is the bond market anticipating perhaps inflation will stay higher than expected, and or the U.S. economy is a little bit more robust than what was previously thought. Ivan, do you ever look at yields? Do you look at the 10-year yield? Do you look at the 2-year?
But why is the market expecting higher inflation going forward?
I don't know, man. I go to the grocery store and spend a lot of money sometimes, so maybe I'm contributing to that inflation problem.
What does T and H mean?
TH, Trump Harris?
What have both of them said?
That they're going to cut costs and spend our money reasonably?
Opposite. They're going to spend ridiculous amount of money. I don't know how much, but they as far as I have seen, the reason is actually political, is that they are, I guess, promising money to whatever projects they want to invest into, and that's more money to the economy that we don't really need. But it's of course to win votes. So that's my little opinion of why we might be pricing, and of course also higher and better economic data coming out. But yeah, I think that is about elections.
That's a good point. And that's the bond market thinking exactly what you're pointing out. Okay, look, either candidate is likely to spend a lot of money, which could keep a floor on inflation for a while, which could also keep a floor on interest rates for a while. If the Fed is seeing interest or inflation not going down any further, if it bottoms out around 2.4, 2.3 before we get to 2 due to government spending picking up or kind of staying elevated, it's possible that the Fed won't cut rates as much as previously expected, and that's kind of what the bond market is thinking about. So yeah, it should be interesting to see where that goes. I actually would not be surprised if the bond market is a little overestimating how many times the Fed's going to cut next year, which is partially why I'm also a little bit cautious on the dollar bearish side, Ivan, is just the idea that these guys, either one of them is they're going to spend a lot. The U.S. economy has been upbeat. I don't know. It's a difficult one for me. So I'm sort of caught in the middle. I do like the Euro USD short side, but that's the only currency pair that I'm like convicted on right now.
Yeah, so you have the technicals with you, but it's been a bit of, I wouldn't say rough downtrend, but it's been quite aggressive.
Yeah, no pullbacks. I'm not in it right now. I wish I was, but I haven't been able to get any pullbacks on this one. So I've been painfully watching it run away from me.
But you know what that means in my book, right?
What's that?
Whatever. Gravity has two rules in Forex. One, if it drops hard, it bounces hard. What is that, Newton's first law or something?
Newton's first Forex law?
Yeah, Forex law, yeah. It's a force thing, but yeah. Whatever bounces hard will probably, without friction, bounce
I agree.
Back. No.
When you get these huge moves in the FX world, usually there's a big rebound move. So yeah, I mean, I'm looking at like a 50% retracement on the daily chart. So I've got a potential entry all the way up at 1.10. So we're very far away from any entries for me personally, but we'll have to keep an eye on it. Ivan, we got Chris. He's gonna kick us out here. It's his turn. So before we step out, let me just mention to everybody watching, if you guys are not already following Ivan, he has his own YouTube channel. We're going to drop the link to that. You can contact him if you're interested in one-on-one coaching. Ivan, we've heard so many different good testaments from people in our community who have taken up one-on-one coaching with Ivan and have seen, great substantial improvements in their trading simply from working with someone who has the patience and willingness to help them through their process and strategy, and also keep them brutally accountable with his Norwegian self. He's very honest, and we like that. That's great for trading improvements. So guys, make sure to go follow Ivan, find him in there. If you're already in the Discord, you can send him a DM. If you're in the A1 Trading Discord, you can see him in there. Send him a DM. He'll happily chat with you. So Ivan, thank you very much for coming on the show today, man.
Thank you very much for having me.
All right, we'll see you next time. Okay, guys, we're going to take just a quick break to thank our sponsors here, and then Chris Pulver is taking over the show here to take a look at some more charts with you guys. A little bit of a turnaround here in indices this morning. S&P 500 back to flat on the day. Russell's down, though, so maybe some pullbacks in the Russell happening currently. Gold is up, silver's up. Got everything moving here to start off your Monday morning trading. Let's jump into a quick break, and then Chris Pulver is up next.
Oh, Chris Pulver took a trade in our Discord.
Oh, really? Let me see.
Pulver alerts are now available in the A1 Trading Discord. If you want access to everything Chris Pulver is trading, click the link down below, or click the link being dropped in the chat now to speak directly with a team member.
Hey everybody, how we doing? Happy Monday. Welcome back to the sesh. I'm just getting a couple of things organized with Pfizer. So I'll walk you through that here in just a moment. I also added some hedges this morning that I want to talk about out through the 8th and the 15th, doing some MES and ES hedging, just in case the market is sitting here at these all-time highs and it's not all rainbows and lollipops and tasting the rainbow and all that good stuff with these crazy melt-ups. So yeah, I've got a couple things to share today, as well as going top down, looking through the charts. Grabbed a nice little win this morning on SPX. So here's Pfizer. I just want to double check that all my accounts have the 10 contracts sell at 29. I'm working the cost basis down. I collected 76 cents. So that brings my break even down. So 1.82 minus 75 and 76 cents. So that brings my diagonal spread cost to $1.06, and it's $1.06 plus the $25 level. So 26.06 gets called away at 29. That gives me 294 net profit if called away. And that is on a 10 contract. So that would be $29.40 in profit by the 1st. So I'm going to have to sit on earnings. The reason I opted to go to $29 instead of $29.50 is it's closer to the current price. I collect a little bit more premium. If price goes up, I'll forfeit it. It was only a difference of $200. And for me, I'm much closer to current price. So I'm going to let this go. So I need to check just really quickly. I've got 10 long calls and 10 short calls to create that diagonal spread. Same thing here, 10 and 10. Just want to double check that these are all matched, so I didn't misalign the contracts. 10 and 10, and 10 and 10, 10 and 10, and 10 and 10. Perfect. Okay, so there is that. That gives me $1.06 break even. That should be called away by 294. Or for 294, hopefully by next week. We have earnings on Pfizer next week on, I'm not sure what day it is, but it's going to be at AM on Tuesday the 29th. So I do notice this gap fill in here. I think that, Pfizer is going to be an interesting earnings print. We saw some earnings here. It was up near the highs. We have some earnings here, pop positive, earnings here, pop positive. So either earnings is maybe price comes back to fill the gap prior to earnings, which is fine. Or if we just hold here and then pop up for earnings, I'll sacrifice a little bit on the upside. I don't know if you can hear my dog snoring down below me. He's just being super loud. But I'm going to keep an eye on this one. So adding, this is now a 11-1 expiration, $29 sell call. That would be 2.94 profit per contract if called away. Was anybody in Walgreens with me last week, the last couple of weeks? So Walgreens was a nice little income trade. So that I'll update on my Pulver alerts. So that would be in the stock options trade section, looking for WBA, whether you bought, 100 shares, 500 shares, 1,000 shares. That was a nice little win. That got called away last week at $8 and ended up generating about $350 of income. I'm going back to try to find it in my stocks here. There it is. So this was posted back on October 4th. That got called away last week. And if price stays above $8 by the 10/18 expiration, generate 35 cents a contract for $350 income. And it's going to be winner, chicken dinner. So let me edit that message. Update. Stock called away greater than $8 by expiration. Keep the 35 cents profit per share. Okay, so I'll add that in and update really quickly inside the Pulver Alerts Discord. Boom shakalaka. And do a little reply to that one. WBA shares plus covered call. Called away for profit last week, Friday, at the close. And adding in some dollar signs there too. Okay, I want to talk hedges. Let me get into the comments here. Let me talk some hedges. I added in a trade on ES this morning, and I'll talk through the dynamics of that one. This is what the trade looks like. It is a bit more of a, it's not hard. I'll just show you what I did. Basically, it is a broken wing butterfly or a skip strike butterfly. And what it looks like is if price goes up, I'm going to lose about $1,000 on the trade. Okay. If price goes down, I'm going to win $1,000 on the trade. If price goes down and then comes back up or stays exactly where it is, I can make about $3,400 on the trade. So it looks like this. If price goes down, I have tail credit, I have a profit trap, and then I have risk. Okay, so it's a skip strike, which creates more risk on the other side. So it's not a symmetrical butterfly like some people used to see in this. If you trade options and you see that butterfly spread, it's pretty symmetrical and you have a debit on both sides. This one is a skip strike. So I create risk here. If I go, this is my risk, okay, and everything else is in green. And this is essentially what I'm planning for. Realistically, this is what I would like to have and expect to have. This is the bonus trade. If we end up getting into that profit trap near, expiration, but more than likely, if we're there, I'll just take profit. What do you want? You want up on my lap? You jerk. Oh, all right. This dude needs to hang out. Okay, so I want to throw that trade in. And I'm already in the trade this morning, but I'll share the mechanics of it, see if it's priced any differently than what I took earlier today. And then there's another trade that's even simpler. If you don't like the butterfly stuff, you don't like the fancy option stuff, then you can also just buy puts on MES, which is micro E-mini, and I'm risking about $500 to have no cap on my profit if the market's going to drop at all. Okay, so let's actually start there. That's probably an easier way to start. So /MES is the micro futures contract for the S&P, and I bought a 58.90 put out to the 15th of November. So I go to MES. I go to the 15th of November and I bought the 58.90 put. I paid $89.50 for the trade. Okay, $89.50 for it. So if price goes down, then this will gain in value. So I get more profit as the price drops. If the underlying drops, I get paid. Okay, what's my profit target? To be determined. I think, technically speaking, if I go to the ES feed, if we drop to, I've got a chart alarm here at 5,800. If we drop into this previous level around 5,700, obviously these would be, pretty nice levels. I don't know if we're going to do it. I don't know if we're going to get there at all outside of this little futures gap. If there's enough volatility to maybe, pull back something to this futures gap, that'd be interesting. I don't know if that's going to happen or not. Otherwise, we just watch to see maybe we get a trend line pullback. Maybe we get this trend line pullback. I'm not sure, right? This has been the analysis I've been watching the last couple of months, something like that. So is this calling the top? No, it's just looking to see. We've been shrugging off pretty much everything over the last couple of weeks, and we poked all-time highs last week. We poked all-time highs the week before that. We had really no September effect, which the market's expecting to see the market go down. We're in an election cycle, which usually we have some chop and some pullbacks prior to the election. We're getting closer. I mean, my gosh, it's only 2 weeks away. We have earnings this week, earnings next week going into the election. We got the Fed right on top of the election. So it's going to be a lot of stuff stacked up here the next couple of weeks. So just as a slightly protectionary measure, I bought the 58.90 long put. So if you want to take that trade, it's a little bit cheaper than what I got into it for by a couple of bucks. But that is my trade right there. So basically my profit target would be if we pull back into, let's say, this 50 period. Let's run 5,700 right now. We pull back into previous resistance around 57.50 or 57.20. I'm happy enough taking some profit there. Okay, if we add in the other moving averages, I doubt we're coming all the way back down the 200. If this market's going to maintain a bull market, then we should probably see this thing, hitting a 50 or 100 period and then bouncing back off of those levels. You can, tell by the way I've got my lines drawn here that perhaps this is narrowing into a rising wedge scenario, which we'll see if that's the case or not. So anyway, I'm going to put this in for Pulver alerts, futures trade, take a screenshot of this. And like I said, managing profit wise, if we hit like 57.50 or 5700, I'll probably take some profit on that trade. I could calculate roughly what that delta is going to be worth. That is a 47 delta. Let's say we hit 57.50. So that's about 150 points at a 47 delta. So that's 70 on top of my 89.50 debit. So I can turn it into 160 bucks. And that's 178% return on my risk if price is going to fall. And if it happens quickly enough, then I should also have some time premium in that trade, which might even give us a little bit more profit. So that is one quick trade that I'm doing right now. Did I take a screenshot of that? Not yet, but I will right here. So there's it's an MES trade. So it costs a little bit less if you're trading micro. So I'll keep that screenshot handy. And this is posting. I'm posting this in the futures trade channel for my Pulver alerts in our A1 trading Discord. So /MES, putting in a 11/15 expiration 5890 long put, paid 89.50 debit. This is a hedge. It's that simple. If you don't want a hedge, don't worry about it, but I'm going to put in a hedge. If I'll just put S&P. If the S&P falls at all prior to the election, this is a simple play for some quick profits. Price levels to watch on /ES and /MES is we'll say 5,800, 5750, 5700 as price would find the dynamic support of moving averages. Okay. So entering that, if you'd like to see me go through the butterfly spread, I can. That's a pretty straightforward trade as well. It's basically sitting at the highs. I'm risking $1,000 to make $1,000, and I have a profit trap at like $3,400. So if I'm really lucky, I get a 3-to-1. If I'm just getting price going lower, I can turn partial profit. If I want to sit on to expiration, I'll make $1,000. But it's definitely a little bit more expensive than the MES trade. MES trade is a $500 cost, or about a $450 cost. Cheaper than that, actually. It's just over $400 cost, but there's no cap on it. So if we see a quick price to the downside move, then yeah, easy. We'll grab some profit there. Okay, so we'll get that screenshot posted and sent. So that's now in the futures trade section in the Chris's trades area. Okay, so that is that. S&P is falling a little bit. We're turning south. SPX in the morning, 15 minutes, had a bit of a sell-off here. We've had some pretty quiet price action overall. We really have. I mean, the last week or so, everything was pretty calm, with the exception of like the gap up on Thursday. And it really wasn't a directional day Thursday. It was a gap higher from Wednesday to Thursday. But overall, the distance from high to low was pretty slim. The week before that, we had more of a directional week, and then it was slim, and then it was slim, and then so we've had, you know, 2 very tight weeks, one kind of blow off week, and then another indecision week. So I don't know. I mean, obviously price can keep doing its thing, melting higher. There are some earnings plays that I'm interested in this week. We have Tesla this week with earnings, not Tulsa, Tesla, which I'm sitting here with a credit spread that I still want to manage. Couple things I could do on Tesla. So we've pulled back a little bit. If I do a debit spread for just earnings itself, I mean, so here's the deal. I've got a 225 by 220 credit spread. And what I plan to do with that trade is this. If price for Tesla earnings, which I believe is Wednesday, probably Wednesday after market. Let's see. Yep, Wednesday. I'm assuming it's after market. Let's go Wednesday here. Tesla is after bell on Wednesday. Let's see what their forecast is. I mean, it doesn't really matter. I mean, yes, we had a miss in earnings, a hit on revenue, and the price dropped. We had a miss on both, but the stock rallied. So it again, just like with typical earnings plays, it's pretty much a coin flip. What I'm doing with this trade right here is I'm taking this trade knowing that earnings are coming, and if price is going to go up and fill this gap, that puts us back up towards 240. Very likely, this 269 credit, I could close it out for maybe $1. Let's say $1.35 or less, right? So if I pulled in 269 credit and I see a debit of $1.35, that's a 50% take profit. I might just close it out if we come back and fill the gap. Okay. The flip side of this is if we are sitting here with this gap, okay, that doesn't get filled and price drops again and we create another gap, I'm willing to own shares of Tesla and try to own it as cheap as I can. So if we come back down to the lows for the year, which was right in this turning point, if we can go back towards the lows of the year, I want to own Tesla and I want to repair this thing for $5 or $10 a share. And it's pretty simple to do that. You have to have the buying power, of course. You don't want to own the shares. This is easy. If price drops and your 225 by 220 is at risk, then you're just going to take on the $2.31 risk and you just let the trades expire worthless. There is a point where if you're doing credit spreads, the broker may assign you, because if you are sitting here with a 225 sell put, that is telling the broker that you're willing to own the shares at $225, right? So if I have the 225 by the 220, the 225 is where I'm willing to own. The 215 or the 220 is my long put to hedge. So if price drops, I'm going to use my 220 long put to take some ownership. What's up, Frank? How are you, man?
Pretty good.
Good.
You're going to price out Tesla?
I'm not out for an individual play because I'm already in it. I got into this credit spread with the intention of if earnings is solid, it's an income trade and it goes up and that's an easy win. If price goes down, I'm going to take advantage of the higher implied volatility and I'm going to repair this trade by basically closing out the long put at a price that I think is worthy of owning, which truthfully is back into like 180s or 170s. I still think this is a big indecision trade. Like there's not a lot of upside unless this thing's going to rip up towards 265 or better. If it goes to the downside and we have a couple of gaps, I still think the stock itself will fill those gaps. But yeah, so I don't want to price in just an earnings play because I have the credit spread. But there are a couple other ones I'd like to look at. So notable wise, let me see if I've got a screenshot in here.
How far out was that sell put again?
It was out to the 15th of November, so I went to just the monthly.
Okay, and it was 225?
225 was the sell put, 220 was the buy put. And if price is going to drop, then there is a chance that I get assigned. If price falls, I may get assigned on the shares just by the broker. But I'm okay with that. If I get assigned, I will hopefully see price drop to like maybe 185, 180. And the nice thing is this is all hypothetical here, but let's say that I do get assigned. Okay, if I do get assigned on shares, even going out a week, let's go out like not this Friday, but next Friday, if I go out 2 weeks and I have an at the money call, I can take off about $9 or $10 every single week with doing a covered call. So that's why I'm not worried about repairing the stock. So even if I take on the risk of a credit spread and I take on the assignment risk, even if I get assigned, I go out 1 or 2 weeks and I use a wheel strategy just to add covered calls. I can get out of this trade for probably, $2, $3, $5 pretty easily. If I flip it for, $5 or $10 a share, that's even better. So I don't know. I'm just confident that the premiums are high enough that I can repair the stock and generate some income out of it.
Gotcha.
Yep. But if it goes higher, then we get above 225, then we just have a winning credit spread, and that's just simple income. So pretty easy.
Are you going to take any earnings trades?
Yes, I was just going to look at them right now with you. So I was going to see here. This is kind of an at a glance from Earnings Whisper. There's like 140, maybe there's more than that this week. Let me check. These are some notables. If we go to, yeah, there's a lot more than I thought this week. Okay, so we have a total. We have over like 400 this week. So we
There are
had
a lot.
39, 70, 134, 175, and 29. Yeah, we've got 447 stocks reporting this week. So the meat of the week is Wednesday, Thursday. You've got over 310 stocks reporting on Wednesday, Thursday. So that's really where most of the earnings is going to come in. I'm curious if the market's going to gap higher or lower based on the consensus or what happens with some of the big notables. But if I look at this here, are there any logos that stand out to take a look at and trade? So, Verizon, 3M, not necessarily like high volatility plays, GE Aerospace, Lockheed Martin, like some of these defensive, Raytheon was in here. Those are sitting near all-time highs. I'm curious how those look. I don't know, I might keep it really cost effective and just do some bull call spreads. Or if we're sitting at these highs, maybe take a stab. But I mean, Netflix was pulling back 4 days last week and then ripped up through earnings and actually got me paid on 2 bull call spreads. So I don't mind taking a look at some of these. I'm probably not taking any trades for Monday, but a couple things I'd look at here, Frank, would be either Tuesday, Wednesday, Thursday, and then price out for a Friday expiration and just see with like a simple bull call spread, if I buy a call, sell a call, or I buy a put, sell a put, and just kind of see how these things stack up. So any
Yeah.
notables that you like this week? Any charts you want to take a look at, or any earnings you want to take a look at?
I do think Lockheed will move.
I do
on
too.
earnings, and that's tomorrow morning.
Okay, so that's before markets. We can take a look at that one.
I'm thinking that so they're projected to have lower earnings.
Okay,
We're now at, is this an all-time high for Lockheed?
most likely.
I would say that a lot of things would have to go right for it to move up. So maybe, I don't know, looking for volatility, but I guess more geared towards the downside. So if we were to see a very good beat in everything,
Yeah,
I don't know how much higher it would go. And then
right,
if it does pop higher, I don't know how much it would last
right.
or how long it would last up there. So I would guess position for downside, but
Interesting. Yeah, maybe
or little movement or downside.
yeah, I'd almost be willing to. So Lockheed tomorrow morning. I don't know if I want to go out just this week for expiration or give it another week. Because if we did this where Lockheed blows out earnings and then fades, maybe I want to go a little bit higher. Yeah, we'll find out. I'm just trying to think here. I mean, bull call spread's probably pretty cheap. I mean, this is one way to take a $600 stock and not have to pay an arm and a leg for it. So if I go to, what is it, LMT? Yeah, so let's go to LMT, see what this one actually looks like for earnings. So if I go to the 25th and I buy, let's let this fill up here for a second. Do I have any notable open interest levels? I've got the 610. The 610 and the 600 are popping up a lot on the call side. 353 at 650, that's way up there. I guess before we jump into this, let me actually see what the earnings does. So option slam. Let's go to LMT.
I wonder what it would say.
So we're looking at about an average move of 4%. So I've got 5 and change, 4.74, 4.31, 4.77, 4.72, 3, 3.8, 3, 3.55. The average is 4.15. That's fair. I mean, a 4% move on a $600 stock is definitely a mover. So 614.95 times 0.01 or 0415. So we're looking at about a 25.50 move. Let's look at what the expected move is here. This shows 22 for the market makers on Tasty Trade. So 22 to 25.50 or so. Fair, fair, fair. All right. If I buy the 615 and I sell, it's just favoring. This isn't terrible, Frank. If I paid $1.10 to make $1.40, that's not a terrible trade. If I were to say, I think it's going to go down, if I buy the 615 and sell the 612, I pay $1.30. So it's actually more expensive to pay on the put side than it is the call side. Not, it doesn't, I mean, there's no difference. But it's just crazy to me that the price skew is it's just so much more expensive to buy puts right now. And I just think that's where we're a little bit stickier on the volatility side, but it's crazy how much more expensive puts are. So I'm curious, does it blow the top off on Tuesday and then fade the rest of the week? I don't know. It's not that expensive. I'm trying to think, what else could I do on this trade? I don't really want to trade it both ways. If I were to, I mean, I could do it similar to what I did on TM. Is it TMS? That is TMS is the nope. TSM. Yeah, Taiwan Semi. I did. Sorry, TSM. Trading at 201. And I'm looking for this thing to get below $12. I've got a $12 credit. I'm looking for it to come back to like 10.98 on the debit side. So I need to see if TSM will fade a little bit towards that earnings gap. If I did the same thing on Lockheed, let me just price it out really quickly. So LMT, yep, Lockheed Martin. So go out to Friday. If I were to sell the 615 call, let me go slightly in the money here. So I can get 21.10 if I go in the money. If I go at the money, I get 23. Interesting. So actually I flipped this. So sell that, I get $26 now. So as long as price doesn't say at 615, I can collect a lot of credit on this trade. Obviously,
so
I'm not
looking to hold price within like a 4% range.
Roughly, yeah. I'm going to see if it does that. It's been fairly consistent from what I can see here. Upwards of maybe 6%, but a lot of fours, which is essentially what I'm getting. If I get a $26 move, it's going to be close, man. 4.15 is still a $25 move. I don't know if I get enough credit to make that worthwhile. And that's obviously a lot of buying power that I don't want to sacrifice. So I'm curious what the risk is. If I went out 612, so if I were to sell just in the money put, so I get 26 there. But if I were to spread this, let's go 612 down to like 580. 580. So that covers me for like $27.50. So if I buy that call, I go out $20. The spreads get a little bit crappier on the upside. They get $5 wide, which I don't love, but I could sell that one or buy that one. Now it turns into a debit. What? That's weird. Am I not up enough? That's 20. Oh, that's not enough. Let me go up to 650. What the heck? So I sell the middle and I buy the wings, and it actually cost me to take the trade. Well, that's not what I want to do. That's weird. Actually, I think
so the way you're doing
I have this backwards.
Yeah, it looks like you're betting on upside.
No, I got to flip this around. I'm going to go 6. This would be 27 there. So I sell the 612, buy the 640, sell the 617, and then look at the 590. That's $27. Okay. So this isn't terrible, but I'm risking $800 to make $14.50. I'm probably not going to make $14.50 unless price stays within this range. This is similar to the TSM trade. I don't know, man. I think I'm just going to look at some debit spreads it's not a bad trade. I mean, 640 to 612 is 2750. 617 to 590, that's 2750. So it should incorporate the expected move. Market maker here showing 22.27. We're looking at an applied move of 25. The only issue is if this stock were to hit earnings and have an upside, okay, the question is, do we hit upside and then fade? And do I have enough time in the trade to see that actually fade? Does that make sense? That's the only reason I would maybe not take this trade. Or if I went out one more week, let me go out to the 1st. Let this fill back up. Let's see what this looks like. So what's the difference here? Yeah, I get a little bit more credit. This one's not terrible, but now it takes up about $2,800 in buying power.
You want to wait 2 weeks?
No, it's not that I want to wait. I mean, if price is going to fall or price is going to stay where it is, I mean, what I'm doing is I'm trying not to get the initial crack in earnings where it's like if we have a big reaction one way or the other, and then it just fades off of that or fades off of that, then that's what I'm looking for, is going out an extra week to see if price just reverts back to the earnings play. For this week, I would say it's probably better to be slightly more directional. I mean, look, this stock has been on a rip for a while. I mean, basically since this summer. It's been pretty impressive to see this thing go since July of this year. I mean, that's a big, big move on a stock that's usually defensive and low vol. Yeah, 34.5% in the last like 3 months is a lot. So
I think it was the geopolitical tensions.
I'm sure it was, but and that's also why I'm not calling the top here, because there's still geopolitical tensions, surrounding everything right now. Gold is still up, silver's still up, volatility is still high in the VIX. So I could still see like a blow off move. I guess I look at it this way. We're sitting here at 615. Let me see what this is going to cost me. If I just buy the 615 and I sell the 617, it costs me $1.20 to make $1.30. If I go in the money, it's going to cost me a little bit more. Cost me $1.25 to make $1.25. If I want to go one strike out, costs $1.05 to make $1.45. Like, that's not a bad play if the market's going to move to the upside. So
yeah,
that might be the cheapest play right there, dude. I think I'm okay taking that trade. This stock's had a ton of momentum. I don't know. It's obviously a risk, and my worst case scenario would be I risk $100. I risk $100 to make $145. Like, I'll take the trade.
So you're kind of calling the top.
No, I'm actually going bull. I'm going bull call spread. So I'm going to see if it blows off the top. Similar to what Netflix did. Netflix made a higher high. I'm going to see if it blows off the top. So if I win $150. If I lose $100. The only reason I'm not taking the trade is I've watched the S&P drop about 3 points in the last 30 minutes. So we might have a bit of a pullback coming. And that's another thing with earnings too. It's like, earnings could be, look at all these. I mean, there's a lot of green earnings in here and there's a lot of chop. So I don't know was earnings here, like, is that the reason that we went up? No, it's because geopolitical tensions was feeding all this momentum behind its defensive stocks. So I don't know, efficiency wise, this thing should want to drop a little bit, but you never know with earnings. Let me check some open interest.
We've already had a, what is this? A 27 point move in the S&P.
Okay.
Which is kind of a lot for a Monday. Before noon, at least, seen I guess a considerable sell-off, but
yeah.
We closed the gap of Thursday's close, and then we also closed the gap of Friday's close. So we went up, touched the gap, then came all the way down and closed the gap on Thursday.
You're talking this guy here, Thursday's gap.
Yep.
Yeah, so we took out Friday's low. We tested Thursday's low. If we're taking that out, there's not a lot necessarily stopping us from going back down to the weekly low. So like you said, we filled this gap here. We're testing the low from last week, Thursday. If we take out these levels, we might be gunning for, we don't break the highs, but instead we come after last week's lows. Yeah, it could be an interesting week. So one more thing on Lockheed Martin. I was just looking at some of these big like sticky levels. We're trading at 614.36. based on what I see right now, this stock is lining up for, I mean, it's earnings tomorrow morning, right, Frank?
Yep.
So before market. I've got 600 on my histogram as maybe a sticky price to the downside.
Does that just count how many candles have been at that price?
No, this is a combination of like open interest and the underlying asset price plus delta, gamma. This is all sorts of stuff to calculate like where like mostly the order flows are going.
Okay.
So I just don't know as we come into, like, is it today only? I mean, this should be, because the stock only expires on Fridays. This obviously can change very quickly just with earnings. So I might, see this today and then it all changes. Maybe I'm better off looking at the open interest. If I clear this out, let's go to this Friday. Let's just go to the 25th. Let's take a look at the big open interest levels. So on the call side, we're trading at 614 and change. The call side, I see this massive open interest at 650, but I see a lot in the 620s right now. And then I see one down to 600. So that is I'd say down to 600, up to 650. That puts me right around 625 for the market maker average. If we go to the put side, I don't see anything on the upside. It's all to the downside, and it stacks up. I mean, 600 is probably the one notable price that I could see price getting back to. So there's a decent amount on both. So open interest on the puts, open interest on the calls at 600. And I'm curious if the open interest on the call side is actually covered calls to get it called away for a lot of people that have been in profit. On the surprise side of the upside, 650 might be, the bigger level, but that's a big move. That would be a $35 move, which is way beyond the expected move.
Yeah.
I don't know. I think I don't know. I think sitting at all-time highs, I don't really love a bull call spread, even though it's super cheap.
I have a feeling that I will probably stay where it's at or go lower. I know it's cheap to go bull call, but
yeah, it is cheap, but that's what I'm saying. Like, it's not worth the risk if I'm just going to see this thing like stay where it is or go lower. But a bull call spread is a lot better than just buying a call, So anyway, let's do this. Let's go to another. Let me highlight some of these. So I like coming back to Lockheed, maybe if I like the trade. So it's right in here. FCX is another one that I've been watching. And then I want to look at the IV on a lot of these. So Texas Instruments has like decent volatility. Verizon, I think, has been off those lows. 3M, I don't know. I'll take a look at some of these very quickly just to spot check the price. RTX, that's Raytheon. That's another aerospace trade or defensive play. And then
Boeing. I think
Morris.
Boeing moved.
Philip Morris International, is that MO this week? Or is Philip Morris still its own thing? So Philip Morris. PM. Oh, yeah. Trading at 119. Dividend at 4%. Let's see here. This is tobacco. My gosh, man, this thing has this outperformed more so than MO? So 89, up 40+% for the year. This is nuts. So look at PM versus MO. Similar rips for the year. Up around 36%. Actually, PM outperformed. Must be stressful times if tobacco stocks are higher. This is why I've been in. Yeah, I've been in BTI. BTI is British Tobacco. It's like almost identical. So I've got some exposure on BTI. Anyway, what else? I'll take a look at those highlights.
Boeing might be a big mover.
Boeing's a good. I've got some exposure on Boeing already. I bought some shares of Boeing. Let me see what that's trading for. So Boeing, yes, that's been highly volatile and beat up all year. AT&T, I have a lot of ownership shares of. I might take a peek at that one. Coca-Cola. If we dip on Coca-Cola, I always kind of like to buy dips on Coca-Cola just as dividend play and low volatility. What else?
Wow, Boeing's EPS is -10.
Yeah, I'm in it because it's kind of the only game in town as far as building planes. They also benefit from any type of defensive, like an arms race. Essentially, we'll get airplane manufacturing going to highs. IBM maybe in the AI race or the chip race. Thursday, airlines. I mean, United Airlines reached some recent highs. We might take a look at these just for consumer cyclicals, health of the consumer. UPS has been a big one too to kind of show the state of the economy and business. I mean, who's shipping with UPS? Is it up or down? Their union also is killing that stock as a whole, so that could be a plaguing thing as it goes on. What else? Anything else here? Union Pacific, you want to trade some railroads, Tractor Supply. Anything on Friday?
I think
Piper
next
Sandler,
week is
Wisdom
going to
Tree.
be better.
Next week's going to be Mag 7. Is that correct? I
Yeah.
think we have a bunch of Mag 7s getting sprinkled in next week. So notables here. I mean, I'm probably going to spend my free time today looking at some of these. Let's do this really quickly, Frank. Do we have Nick coming on in a few minutes?
Yeah, we got a few minutes to look at one more.
Okay. Let me just do a quick spot check then and just look at the stock itself. So if I go to Verizon, Verizon's trading at 43. I mean, not super interested in playing this one outside of maybe an inexpensive bull call spread if we beat earnings. I would have liked, and this is what I'm kind of hoping for, I'd still love to see Verizon come back into the mid 20s. But, we're talking about levels. This is a weekly chart back into the 2003, 2004 levels. We may not come there. This is 2024's low, which I'm actually surprised we had that low. That was a low from October last year, and we bounced off of that. I don't know. Verizon might be decent. I mean, I think there's good, like technically speaking, I think there's good upside potential on Verizon. So that's not too bad. Even though T-Mobile's been killing it, like T-Mobile's been like the best cellular play compared to AT&T. Look at this thing. I mean, this thing has just been on a rip since like 2015, but it's choppy now. Anyway, Verizon's not bad. Maybe a bull call spread there would be pretty doable. We'll see. So that's one to note. 3M, so triple M. I mean, I'm not that interested in going. If this was sitting near the lows, I'd be way more interested in a bull call spread down here. Not after the stretch. So probably not going to touch that one yet. RTX, this is Raytheon, sitting at these all-time highs, just like Lockheed Martin. So I don't know. I just don't love all-time highs. They're easy to trade. Texas Instruments, that's TXN, also sitting near all-time highs. All right. I'll do some crafty pricing here. Let's go to Boeing. What's the stock price doing? 160. Good. So I bought this thing at like 153. So I'm up about $6 or $7 a share. They've got earnings on Wednesday. I'd love to see some Boeing go higher, although I am prepared for a couple more dollar cost averaging levels. So I bought at 153. I'm going to put another trade in around 120, and then the lows around 100. I think I have that sitting in my broker.
What would get it to move higher? Because its last earnings was minus 2.9.
Mm-hmm.
And before that, it was hovering around the same range. Now we're projecting $10, like minus 10. So if it does a minus 7 or a minus 5, is that going to be good news for the stock or
Yeah,
what?
I have no idea. I mean, it could just be a surprise. It could be a surprise across the board. That is an interesting. Yeah, they're not looking good. That's for sure. But I mean, I didn't buy it based on the earnings trend. I bought it based on, we came back into 2020 lows and we established a really nice floor here on 123. So I'm trying to essentially dollar cost average into this thing to the 123 floor and see if we just range. So I don't know. I mean, if it gets a lift, great. But based on earnings and based on the trend, we probably could go lower. So I'm just going to be prepared for maybe another hit to the downside, and then I'll just dollar cost average in. So if I look at my Boeing position now, let me check here before we go. See what I'm actually up on the shares. It's not going to be a ton. I didn't buy a ton of shares. I just put like a couple $1,000 at it. So BA, I bought some shares. Trade price 154. How the hell am I? Oh, because I think I had a losing credit spread. That's why. Okay. So P&L, I'm up $56. All right, never mind. I'm not going to do anything. I'm just going to keep the shares as is. Individual play. I will say this, Frank, if we have BA come down to this level, then I'll put in some credit spreads and bull call spreads. I like that a lot better versus getting it now. If we dip into this like mid 120s or low 120s, then way more interested in some credit spreads, debit spreads, combination of things. So that's one. All right, dude. Everyone that's in the Pulver alerts, what I'll probably end up doing for my openings today would be price out some trades. I think with Mag 7 coming tomorrow, I'll probably just take a couple stabs at some earnings plays overall. But if I like the price on something, look for a couple trade alerts to get posted. I don't necessarily love taking earnings trades right away on Mondays. So yeah, I think I'll just kind of price them out, see what's cheap enough to take the trade, see what the market wants to do. But I did put on those hedges this morning. So ES and MES. We had WBA get called for profit last week. I'm trying to think anything else. Yeah, that's it. I'll just be combing through earnings. But all right, man, Frank, let's do this again tomorrow.
Okay, sounds good.
Thanks, dude.
Thank you.
All right, thanks everybody. And Nick Phillips on next. See ya.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Good morning, good morning, good morning. Welcome to the 11 o'clock segment of the A1 Trading Show. I am Nick Phillips, Forex trader of about 6 years, turned futures trader last year, so about a year now of trading futures. As always, during my segment, if you guys have any questions, feel free to drop them in the chat, and towards the end of this segment, I will come back and try to go through all the questions one by one to make sure that I answer any of them I can for you. All right, let's look at what we have on the calendar for this week for red folder news. If you guys don't know, for those of you that do know, I mostly trade red folder news. As things drop, I take advantage of that catalyst to try to be involved in the market as it price recalibrates to adjust for that new real world information that's hit the market. So nothing today. Obviously, the calendar is completely empty today. Pretty quiet day. I'm not trading at all today, mainly due to this. Tomorrow we have Governor Bailey speaking. I will be paying attention to that. Not really sure what kind of opportunities may or may not present themselves, but I will be watching that. Not necessarily going to be watching any of this. As President Lagarde begins to speak tomorrow, what is this? It's a panel discussion for the future of cross-border payments. Not really concerned. I really try to focus on speeches that will have theoretically some impact on monetary policy. So tomorrow, really just the Governor Bailey speaking. Guess there's the BRICS summit, but I don't really trade anything involved with BRICS, so not too concerned about that. Wednesday is going to be our first kind of big event day with the Bank of Canada monetary policy report, their rates, and their conference happening all kind of early in New York session. So we will be paying attention to that. And I might be paying attention to this Governor Bailey speech again tomorrow or Wednesday afternoon, but this is kind of towards market close. So most likely not. We'll probably have knocked off for the day. On Thursday is my big day. Thursday this week is the day I'm looking forward to the most. I have it's like a love-hate relationship with this day every month because as you can see, these events are starting at 3:15, 3:30, 4 a.m., and 4:30 my time. Most of the time, if I'm going to trade a London event, it's going to happen anywhere between 2 a.m. and 3 a.m. my time. And then after the event, usually I'm done trading within half an hour to an hour, and I can just go back to bed. That's not going to be the case on Thursday because I got to be up around 2:45, give myself about a half hour to wake up and get prepped for the event. For French PMIs, and then 15 minutes later, we have German PMIs, and then an hour later, we have GBP PMIs. By the time the Euro PMIs come out after French and German, I'm really not getting involved because this tends to not move the needle as much as French and German PMIs do. But then an hour later, we have GBP PMIs, which I will be paying attention to. And then like 4 hours later, unemployment claims. So Thursday is going to be a little bit of a terrible sleep day for me, but I love the flash PMI days. They are some of the most consistently tradable opportunities that I've found when it comes to red folders. And it helps that there's 4 flash PMI opportunities back to back on those days. We have 2 for Euro, being French and German. Most of the time, I let the French numbers drop because 15 minutes later, the German numbers are going to drop. I don't trade anything off the French numbers because you'll often see the market does a big recalibration, but there's not enough time to get in before the market just kind of consolidates as it waits for the German numbers. And then when the German numbers hit, it's like, okay, here's the real deal. Here's the real opportunity. Hopefully it gives us an opportunity. We get to get in on that. Follow that up with pound and then U.S. Manufacturing PMIs and services PMIs. Now, we also have unemployment claims at 8:30. This may present a slight opportunity, like a real fast scalp. I'm talking in and out in less than a couple minutes. I don't really want to be involved in the unemployment situation on Thursday, only because an hour and 15 minutes later, we have flash PMIs. And I think some of the price action in between unemployment claims and the flash PMIs might be a little hectic. It's either going to consolidate or get choppy. So may not trade that, but we will still pay attention to it. All right. And then Thursday night, we do have Tokyo Core CPI. As much as I would love to trade CPI from any currency, when it comes to Japanese data, it tends to not do the reaction functions for JPY data are not consistent enough for me to actually want to get involved, but something to pay attention to if you're involved in any JPY pairs come Thursday. And then on Friday, we have CAD retail sales, which we will be paying attention to, and USD durable goods. So it seems like a busy week when you look at it like this, but really, from my point of view, Bank of Canada interest rate decision and the conference may present an opportunity. Thursday is my best day. Thursday is going to be my best day. There's 4 events, and if 2 of them give me a good opportunity, cool. That's my week. I'm done for the week. I can walk away. And then Friday, CAD retail sales, maybe not. We'll see. So it's kind of a light week. But regardless, this PMI day is looking good to me. I'm very excited for that. Let's see. All right, let's move over to actually analyzing. Before we do that, let's take a look at some headlines this morning and see if we have anything worth mentioning. Hedge funds side with Trump trades and equities, says JP Morgan. Okay, hedge funds, got that twice. USD CAD runs to a new high with the broader USD extends towards high from last week. Let's check that real quick. Oh yeah, UCAD is running this morning. I think it's already that headline was from earlier because we've already surpassed last week's high on UCAD. So some nice movement here out of this pair. Believe the Doxy is obviously what's pushing this morning. Let's see how CAD's doing. Oh, CAD's dragging lower. Let's check oil. Oil's giving us a slight rebound from last week's price action, but not much. Nothing notable yet. We're still in very bearish territory here. Let's go back and check some of these headlines. Bank of England's Green says a cautious and gradual approach to easing is appropriate. Bank of England's green. Well, let's see what she had to say. UK consumption recovery lags behind other developed economies. The savings rate high at 10% versus 5% in the US. 3 factors dampening UK consumption. Precautionary savings due to cost of living crisis, so everybody's keeping all their money in their pockets and not spending it. Restrictive monetary policy is making people not want to take loans and go spend those loans. And interest rate changes impacting household incomes. That one I don't exactly understand unless people are having adjustable rates, and those interest rates are, yeah, this one I'm not going to get into because I don't entirely understand exactly what she's saying here. So in this case, here's what I'll do. It's a little trick. It's not always accurate, and sometimes best to follow up with a mentor if you have one that has any understanding of fundamentals. I'll come over to ChatGPT and I'll say, explain this to me like I'm 5. BOE, who is it? Green states that interest rate changes are impacting household incomes. What does this mean? And we'll just say thank you in case AI takes over and we want to make sure that we're on their good side. Let's see. Okay, imagine you have a piggy bank where you keep your money and sometimes you borrow money from a friend to buy something extra special. When you borrow money, your friend might ask you to pay a little extra when you give it back. This extra is called interest. Okay, we understand that. Bank of England, think of the Bank of England as a big friend who helps people and businesses borrow money, blah, blah, blah. When the BOE changes how much this interest is, it affects how much money families have to spend. If they make interest bigger, people who borrow money like a house or a car have to give more money back. Okay, leaving them with less money to buy other things. Okay, so their interest rate changes have affected their ability to spend. Really simple, really wasn't that complicated. Probably did not need to use AI to figure that one out. Discretionary spending remains below pre-pandemic levels. That's interesting. Higher interest rates incentivize savings, delay purchases. So basically, nobody's spending any money. They're saving all their money and they're spending money on, loans that they had prior to the interest rate changes. Okay, so interesting little thing there. BOE Green says cautious and gradual approach and easing is appropriate because of consumption. Let's see. Let's explore this idea a little bit. Why would it be necessary to go gradually with easing? Because of reduced consumption. Okay, so explaining it to me like I'm 5. All right, let's see. If you've been eating a big cookie every day and suddenly stop, your tummy might feel weird because it's used to all that sugar. But if you slowly eat less and less of the cookie each day, your body gets time to adjust. Now, in the world of money, easing is like making things easier for people and businesses to borrow and spend money. If the Bank of England suddenly makes it easy to borrow, people might start spending a lot of money right away. But if people are already spending less because things are expensive or they're saving more, suddenly easing could cause problems. I'm assuming let's see. Too much borrowing too quickly. It becomes very cheap to borrow, blah, blah, blah. Inflation can get out of control. Yes, of course. Confidence issues. Suddenly makes a big change. People might think, why are they changing things so fast? Is something wrong? This can shake confidence in the economy. Okay, so all the typical stuff. I just wasn't understanding how consumption tied into that, essentially. If they have low consumption and they ease really quickly, I guess it could swing the pendulum back the other way. Kind of seems I don't know. We'll move on here. Let's see. Okay. I'm not seeing anything else worthwhile. Overall, a relatively quiet morning, it seems. BOE's green. Okay. Let's go central bank news real quick, see if we can find anything worthwhile. All right. I'm not seeing anything. This is kind of interesting. Let's see. Behind a paywall. I'm not logged in. Chief of Dallas Federal Reserve said the economy is strong and stable, but the central bank needs to be watchful for a rebound in inflation as it gradually lowers U.S. interest rates. This is honestly Lori Logan hit the nail right on the head with what I think. The economy is incredibly strong and incredibly stable. To cut 50 basis points at the last meeting, a little sketchy. Although the consumer part of me wants to see interest rates come down so that I can go ahead and buy a house at a lower interest rate. The global macro side of me goes, there's really no need to be cutting interest rates. We have a strong economy. The economy is not weak or softening. The labor market started to show some signs of softening over the summer, but has since that softness is seeming to dissipate. I don't think we've seen the results of the last couple of hurricanes we've had yet. I think the next NFP may start to show us some of that, see if that created any significant weakness. So let's see. Lori noted the labor market has weakened since the spring, and she asserted that there's still upside risk to inflation. Yes, we know this. They need to proceed carefully in reducing higher interest rates put in place in 2022 and 2023. The appropriate policy strategy depends on whether the path ahead is clear or cloudy. As of now, with the election right around the corner, I think we have, after today, only 11 sessions left. 11 trading sessions, market sessions instead, or 11 market sessions ahead of the election. So it's really not that much. If you guys think about it on let's say a 1 hour, let's look at the 1 hour chart, right? Let's go back 11 candlesticks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So there's on the daily, obviously this is just the hourly, but just take a look at, that's not that much trading, right? Break out to the day. We'll go 11 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. There's obviously big potential for a lot of market moves to happen in 11 days. But in the grand scheme of things, real big moves don't happen in 11 days most of the time. So I kind of think as of now, until we get that behind us, things are cloudy, which is going to be interesting timing wise, because I believe the FOMC meeting is the week after, maybe it's 2 weeks after the election. The election's on Tuesday the 5th. It might be the week after. I think it's the week after. Nope, 2 weeks after. Am I tripping? Where's the FOMC at? Oh, it is the same week. Wow. Okay, so 2 days after the election, we have the FOMC meeting. That's going to be very interesting. Definitely something to pay attention to if you're trading Forex, you're trading any USD pairs. That's going to be an interesting situation to keep tabs on. So definitely cloudy for me, super cloudy until we get the election behind us, and then we hear what the Fed has to say about the new president-elect. Let's see. So the Fed is trying to get rid of securities that they bought during the pandemic to drive down mortgage rates and stimulate the economy. Millions of homeowners refinanced at ultra low rates. I bought during ultra low rates, actually sold last year. An incredible move on my house, but part of me wished I would have had my finger on the information a little bit better and bought multiple properties back in 2020. It is what it is. Now the Fed is trying to reduce its share of mortgages, blah, blah, blah. The Fed has not been able to meet its target on reducing its mortgage holdings, however, because high interest rates have restrained the number of homeowners refinancing their loans. Of course, nobody's getting new loans. I'm a perfect example of that. I am sitting on the sidelines until a better opportunity presents itself and hoping and praying that it actually does. All right. Tapped into some headlines this morning. I don't really know if I'm seeing anything else. This is rather important, kind of a sneaky little headline here from Business Insider. Big banks are bracing, of course. Wonder if I can pull this up. Business Insider, we'll go headlines. Do I have it here? I do not. Unfortunately, won't be able to read that because it's behind a paywall. All right, let's move on here. I'm going to tap into the chat and see if there's anybody with questions. Mark Angelo Lagman said, look at gold. Let's check gold. Gold's having a down day. Pretty significantly down. Let's identify some levels here. I mean, obviously a key level is going to be right in this zone here. This is not a perfect zone by any means, but taps back into this. It'll be around the 618 retracement level, which is not bad. Again, something about gold that I've been avoiding it basically all year is I don't want to be buying gold at these levels, and I don't have any real reasons to sell gold except for maybe some technical indications that we're due for a bit of a correction. But yeah, gold has not been something I've been paying a lot of attention to. It's like it's kind of like the stock market right now, where it's just like, okay, for the most part, everything is up. It's just up, up, up. The everything rally. We may be bracing. I think the markets may start to brace, like I said, over the next 11 sessions in a sort of risk off position here. I don't mean to say that it's going to dump by any means. I mostly anticipate a bunch of consolidation. And then once we get the election and FOMC behind us, it's kind of like, there's the year. It's been an incredible year for the market. Obviously, we've seen a massive upside in the stock market with very little activity pulling it down. We had this one kind of flash crash happen in August. Everybody was losing their minds. But for the most part, we've had an incredible year. So I anticipate a lot of the big players, a lot of the guys on hedge funds and, not prop trading, but actual proprietary trading desk. I anticipate them kind of just calling it a year after the election, maybe a couple weeks after the election. Bare minimum, Thanksgiving is usually the end of the trading year. So I expect a bunch of consolidation, maybe some range bound price action. Let's check the daily here. So I could see for the rest of the year, maybe we pop up, maybe we hang out, but we just sort of do this. Again, unless something massive changes. All right, let's see. Emperor said these are some excellent sites. If you're talking about the PIQ suite, yes, this is incredible. I pay for the full version. I think it's like $70 a year, $70 US a year or something. It's incredible. I love this news terminal. But the free version is just as good. It's just, you know, you might have an ad here and then another ad here and then another ad here. Whereas I have like one ad every 1,000 posts or something like that. So really good news outlet here. But yeah, for the most part, quiet day, quiet session. I'm not really looking to get involved in too much until Thursday. I'm not seeing too many questions, so I assume everybody else is doing like I am doing and having a bit of a quiet day. See if I have anything else to follow up with here. Nope, I think we're good. So, all right, guys, if you want to, feel free to follow me on Instagram. You can follow my company, Victory Capital. Other than that, from all of us here at A1, somebody asked, are you a swing or a scalp trader? I'm a scalp trader for the most part. I will say there are the occasional swings that I like and I want to get involved in. Some things are shifting a little bit on the back end of my trading business, but as of today, October 21st, 2024, I only really scalp red folder news. So there's a small community that I have been a part of now for like a year. I kind of took a step back a few months from them, but they are a swing trading community. And so I act as an analyst for them for some potential setups. But when it comes to swing trading Forex, there's a bunch of nuance there. It can get a little pricey with spreads and commissions if you're trading on regulated brokers. Can be worth it for the swing trading side of things. On the futures side of things, if you have your own account, you can swing trade. The margin requirements on swing trades are pretty high for futures. But for the most part, I scalp. I like to be in and out of the market. I like to know if I'm right or wrong relatively quickly. When I am swing trading, at times in my career where I have swing traded, I find I don't sleep as well, just because I don't know. I like the job to be done when I want to take off, and I'll find that if I'm in a swing position, even if my risk is nothing, I'm not risking barely anything, I'm not great at opening a position and walking away and then being able to rest, right? So I like to get in, get out, have my idea either be correct or be wrong and move on to the next idea. So that's my foremost trading approach. Does it mean I miss out on some trades? Absolutely. There are swing trades that I see setting up all the time, and I would love to be involved with them. But at the same time, I don't want it enough to lose sleep over it. So yes, that is a rather long-winded answer to that question. What is going on, Pray 10? I hope I got your name right. All right, guys. I'm not seeing any questions, so I'm going to go ahead and call it. From all of us here at A1, have a great rest of your day.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.